Hi, welcome to another YouTube video here. This is the first video of our income tax bracket boot camp. I'm really excited to be putting this on for you because I think income taxes in a lot of ways are really misunderstood or have a lot of assumptions that people make about them that are either slightly inaccurate or entirely inaccurate. And one of the things that's important as you understand and watch this video is um, I have a podcast called Death and Taxes, and I'm kind of doing a companion piece with the YouTube channel and the podcast on an income tax boot camp. And each episode, the YouTube videos will show up first on Tuesdays, and the podcast will launch on a Thursday. And they'll be the same topic, but they won't be completely overlapping. I'm not just taking my podcast and recording it here because uh, some things, of course, are easier to understand when you have graphics and things like video. And some things are just simpler to just have a conversation about. So while there will be overlap, we're talking about income tax. Today we're talking about income tax brackets. I really suggest that you do both if you really want the deep dive and kind of full understanding as we get through and go from topic to topic when it comes to income tax here in 2022. So without further ado, I want to talk about tax brackets here, and I'll pull up some visual aids in a little bit so we can see how tax brackets work and what's coming up in the future is really where this video is. The podcast on death and taxes this week, what I'll be getting into is a really deep dive into uh, income tax brackets and their percentages and how they work as far as when income is taxed at certain rates. The YouTube video that you're about to watch is more for some of that basic overview, but then also looking into the future of what's already on the books as far as income taxes work and knowing that difference of when income taxes are going to go up at the latest. Um, just that conversation will help illustrate um, what you need to know when it comes to income tax brackets. Um, so, just why income tax? Let's start there. Why income tax? Why an income tax boot camp and not a life insurance boot camp or a disability, long-term care? Income tax, the reason I like to start conversations there is uh, income tax is probably, if not your biggest, then your second biggest expense of your lifetime. If you're in an industry where you are not like a W-2 employee, but you're writing your own uh, checks to the IRS quarterly or something else, you know just how big of a bite income tax takes out. And it's really because of withholding from the employee side is really kind of underestimated just how big of a bite income tax has. So any opportunity to understand it and then lower that bill really can help compound wealth and generate really multi-generational wealth savings for a family. So that's why I want to start with income tax. What I'm going to do now is I'm going to go and pull up a graphic I created um, when the Secure Act was passed in and went into effect in 2020. So let me pull that up, and then we'll come back and I'll guide you through some things here. Okay, so I've pulled up a PDF I put together. I call it the Tale of Two Tax Brackets because it shows where taxes are going to be this year in 2022 and what the tax brackets will look like in 2026. Because I said earlier the Secure Act, what I meant to say was the Tax Cuts and Jobs Act of 2017. I knew it was wrong. You probably saw the pause in my voice there as I said it. The Tax Cuts and Jobs Act of 2017, of course, reduced tax rates, corporate and personal tax rates. And in exchange for some permanent cuts in other areas, the personal tax rate cuts were temporary, set to expire on December 31st of 2025, which is rapidly approaching. So Congress can always act sooner, although I'm kind of a pessimist on Congress acting. I don't want to be political. I think that's a red and a blue issue. I think nothing tends to get done. And so I would imagine that this tax rate structure, at least in the current political environment, looks like it's going to hold through December 31st, 2025. But before we get into that too deep, what I want to go through here is these tax brackets, just how they work really briefly. Let's start here in 2022. And you can see different numbers. At the top, we have 37, 35, 32, 24, 22, 12, 10, and then SD0. So what happens is if you picture these as like in the podcast, I bring up a Pyrex example. I've also heard of like a beaker in chemistry class, or like one of those sand kind of sculptures you build. If you're pouring, and let's go with sand. If you're pouring sand in here, the first amount here is actually going to be taxed at 0% because you have a standard deduction. And by the way, the numbers on this graph, I should qualify this. This is a married filing jointly. So it doesn't, the numbers will not be applicable. These income numbers will not be applicable to single individuals. They'll be a little off for those, or a lot off for those. And same with head of household and other married filing separate, other filing statuses. But anyway, so the first sand that goes in the beaker is actually fills up as your standard deduction. That's if you ever heard of marketing of 0% tax bracket, that's what that is. You actually get some free money. In 2022, that's $25,900, I believe. Don't quote me on that. I have the exact figure in my podcast that I am releasing in a couple days that I just recorded. I think it's 25,900, somewhere around there. But anyway, so you have that much money that if that's all you made, you wouldn't owe any income tax. If that's the only income you had, income tax would be 0. But then you have some 10%. So after you get after that, you pour some more on. It's not like all of your income is now taxed at 10%. It's just the amount that exceeds the standard deduction. And then from there, once you get to the 12% bracket, again, just the amount that's over the standard deduction, and 10% gets taxed at the 12% until you get to the 22%, and so on and so forth. So one of the common tell-alls that shows how misunderstood income tax is the phrase, don't do that, it'll put you in a higher tax bracket. If you were on the cusp here between the 22 and the 24% tax bracket, right around and married filing jointly with a household income of about $200,000, let's say, and your boss came and offered you a raise, you're not going to turn down that raise so that in order to avoid your income being taxed at 24%, because it's only that extra few dollars of your raise that would be taxed at 24%. So that's an important thing to understand with income tax. The really wealthy, if you have household income at $650,000 or above it's only those money above that amount that gets taxed at 37%. It's not like it goes back to $1. There are certain kinds of taxes that once you pass over a threshold, every single dollar below that gets retaxed at that new rate. But income tax, a federal income tax, is not that way. So that's important to understand. And that's a point I belabored a lot on the podcast because I didn't have this medium here and I went through the exact numbers for the married filing jointly in 2022. I went through those numbers. I'm not going to rehash that here because I want to make a different point in this video. And that is what happens on January 1st, 2026 to your income tax. You can see the different amounts where these thresholds are different. And the numbers are different, right? Instead of 37, we have 39.6. Instead of 35 big, we have 35 small. 32 is a 33, 24 is a 28, 22 is a 25, 12 is a 15, then you get 10 and 0 are the same. So the tax rates go up and the tax brackets change. So that's a big thing to understand with income tax. 2 terms of art here, tax rate and tax bracket. Okay, so the tax rate are these percentages, 39.6, 35, 32, 24, 33, 28. Those are the tax rates. The tax brackets are the range of income, the brackets that rate is applied to, that a given rate is applied to. So that's important to understand, those 2 different terms of art. So Congress, when they pass tax legislation, can do one of 2 things or both. They can change the tax rates and they can change the tax brackets. And you can see in the Tax Cuts and Jobs Act 2017, they changed both. There's been, in the past, there's been some to slash, they just eliminate tax brackets and they say, we need it simpler than this. we'll do 4 tax brackets and that's it. After that, it's too complicated. Whatever they want to do. This is politics. It doesn't have to make good economic sense or make a big difference to your pocketbook. As long as it's something that they can try and win an election on, then they might do it. My cynical political mind's coming through there, but I think that's going to carry the day. That I don't think that's going to be untrue to a great degree. So getting back to this. So you can see here, the tax rates will go up and you start paying higher rates at a lower income amount. You can see here, if you're at, let's say, $250,000 of married filing jointly household income, in 2026, those dollars are going to go from being taxed at 24% to being taxed at 33%. That is a huge increase. Now, before I get into why that's a huge increase, I want to illustrate. This is, in fact, 24 and 33. The difference is 9%, right? So will you be paying 9% more in tax? No, I would say no. Then this is where you're getting very semantics, right? The difference is 9%, subtracting 33 and 24. The difference you'd see in your dollars is whatever amount of tax you paid in this range. Let's just call it $350 earned to $250,000 earned. Whatever tax you paid, you are going to be paying about a third of that extra, a little more than a third of that extra. Let me explain. 24%. What's a third of 24? 8. Add 8 to 24 is 32. So round up 33. So if you were paying $3, you'll be paying $4. If you were paying $300 of tax in this range, you'd now be paying $400. And let's just figure this out. I'm going to pull out my calculator here, and I'm going to calculate. So it's $100,000. This is going to be easy, but I just want to be right with this. $100,000 at a 24% tax rate is going to be $24,000, and then the same thing at 33. So on your $100,000, you're going to be paying. I put my calculator away too. You see the minute I got confident, I ran one simple equation, confirmed it was simple, and then went to put my calculator away. But then I got tripped up. $33,000 minus $24,000. Let's confirm it is, in fact, $9,000. Yes, it is. You'll be paying $9,000 more tax on that $100,000 of income. So you go from 24,000 to 33. That's a big increase. That's more than a 9% increase. That's a third plus a little increase. You understand that? So it's easy in the soundbite, short attention span areas think, oh, 9%, especially here. Oh, you go from 37 to 39.6. Boo-hoo, what a big deal. Well, it is a big deal, especially since this has no cap up here. This can go as high as you want. So that could be a huge, those 2.6 percentage points could equal a lot of dollars of extra tax, and have equaled a lot of dollars, by the way, of less revenue for the IRS, something we're feeling as more and more government spending goes on. So that's what I want to cover today in this video is how these tax brackets work and how they're going to work to increase your tax bill in 2026. This is a huge event that a lot of things in tax. When we'll eventually be talking about retirement accounts, and I'm going to do the next series is going to be on required minimum distributions. And people kind of understand that, hey, this stuff's out there, but they don't fully understand the impact of it. Because it's painful. People like to avoid pain. Last thing I want to touch on before we wrap up this video is right here, the area I've pointed out. There's two key things. This is where my cynical political mind. Look at this tax cut that got in here. Don't you think there's some influential Congress people or donors to Congress people who are right in this? Doesn't this sound like a prime donor level, $250,000 to $350,000 of household taxable income uh, that they wanted to make happy. And then who they really wanted to make happy, doesn't this big chunk look like going from 39.6 to 35%? Doesn't that look like something that somebody wanted to be happy? I'm sure if you had the power to do an audit of what, take the Congress people back in 2017, maybe the key swing votes, although I don't know if, I don't think the Republicans were hurting for votes on this, or the key donors that they wanted to make happy, or the people on the boards of the key corporate donors. If you could somehow audit those, there's going to be some interesting names here and here. So that's just one thing. Putting this graphic together is always kind of triggered in my cynical political mind. But that's income tax brackets. Two takeaways. They're not regressive. Just because you eclipse into a next tax bracket, it does not affect your tax dollars before that. Those are taxed at the previous rates always. And we have a little bit of a cliff coming where people's taxes are going to go up in 2026, passed by Republicans, by the way. So even Democrats in charge maybe in 2026, who the heck knows? But it's kind of a good, shrewd political move that whoever's not in power can say, hey, look at this, these people raised your taxes. That's important to understand, that you only have a few tax years left, 22, 23, 24, 25, to do something about this. If you want to shift, if you have the ability to shift where what counts as income and what doesn't, now's the time to get started, because you need time to really make an impact. Anyway, that's this video. I hope you enjoyed this first edition of the Income Tax Bootcamp. I'm really striving to fill this with good information. Let me exit out of this screen here so you can just get me. I really hope you enjoyed this, and please, the best way you can support me is by subscribing, liking the video, commenting something that you disagree with. I'd be happy to talk to you about it. Clearly, I've delved into a little bit of politics here. While I think I've been fair, that's an opinion, right? And those can differ. I'm also on Twitter at Ayers Rock Plans. Same with TikTok, handle Ayers Rock Plans. I'm on Instagram, Ayers Rock Planning. You can find me there. I have a podcast. I mentioned the podcast, Death and Taxes podcast, and that's available anywhere you get podcasts. So if you could check me out there, give me a like, me a follow there. If you do all of them, you sweep them, I'd be very grateful, as we're trying to get this information out to as many people as we can in 2022 and help grow quality information, right? Just simple, here's what it is, without any kind of slant. So stay safe. I hope you're well, and we will see you in the next video.